Good morning, Forex traders, and welcome to a new episode of the weekly Forex Outlook. This is your host, Sharif Bhat, founder of TrendFollowingFormula.com. In the weekly Outlook, we will go through the weekly calendar to get a clear vision for the financial week's terrain. We will then take a look at markets structure, viewing price action and correlation across currencies, commodities, and stocks. Finally, we will conclude with TFF's bullish and bearish list for explosive markets that we can easily consume with minimum confrontation and the maximum profit. So with no further ado, let's listen to this week's outlook. Good morning, Forex traders. This is Sharif Bhat from Trend Following Formula. Today is Wednesday, the 15th of February 2017, and now it's 8 a.m. here in Cardiff. Our goal in Trend Following Formula is to widen your perception about the market and to direct you traders toward markets which have a higher probability, which carries a higher probability for successful trades and successful predictable outcome. Basically, as we usually talk, markets move in three directions: up, down, and sideways. Unfortunately, markets stay in the sideways area for about 80% of the time, and in the trending periods, which are up or down, about 20% of the time. In the trending areas, markets usually move vertically, and that brings very good price change, and we as traders benefit from the price change. We buy usually low and sell high, and we short high and we recover on lower positions. So we need trending markets. The problem with sideways markets that usually they give very small amount of pips. If you will be trading in them, usually like from 20 to maximum 40 pips, and they are harder to predict. It's very hard to know that we are hitting a sideways area, and if you are in a sideways period, till you really understand that you are in that, recognizing the support and resistance, because usually people can define these areas on the chart easily after the fact. To really be able to define that sideways area, a lot of time should have been passed, and now your target's still going to be 20 to 40 pips, and you might actually catch 2 or 3 trades in this area. And if the market breaks out to create a new up or down trend, usually you find yourself get caught in that move. If you are disciplined, certainly that's not going to be a big problem, because you are going to trigger your stop losses. But 95% of sideways traders, they don't really respect their stop losses, because usually the sideways area is very high frequency kind of trading zone that many traders feel that finally it's better to not trigger the stop losses, because usually price come back to the entry point in the sideways area, then triggers the take profit. So the culture between traders who are sideways traders, not to respect the stop loss, then that actually results in catastrophes once the market breaks out from this sideways area and create new highs or new lows. In this time, the stop loss becomes crazy number. Instead of the 2.5%, it becomes 15 and 20 and 30, and sometimes it reaches the 100%, which means a liquidation for the account. That's why we try to direct our attention toward trending markets. And because the trending markets are basically 20% of the time, you will certainly find that most of the markets that you trade on are on sideways zones. and most of the time you will discover that these markets are not tradable. There are no trends. We said that trends are easy to predict. That's true. I will show a very simple way now, very quickly, how to predict these trending markets and to really recognize that you are in a trend. However, if you are in a trending market, you need to understand that the probability is really high, and that, as I said, is going to happen for a very small amount of the time. That's why you need to really widen the basket of trading instruments that you trade on. Many traders just get stuck to a certain currency. Other traders stick only to trading currencies, but the truth is you need to look at currencies, commodities, and stocks all in one. You need really to look at all markets indices as well. You need to have a bigger understanding of more markets to trade profitably, because you will find sideways happening all the time. So you need to really whenever you find that the market is in a sideways, when you start to lose in it, when you will start to really argue about the direction, when you will start to overanalyze the market, you need to understand that this market now is in a sideways area, and you need to get rid of it and look at other markets, which could be, for example, stocks. And believe me, if you don't understand a lot about stocks, just being in a trending market in a stock in few very little days, you will understand how to get into this and how to exit. The technicalities about the pricing, about the quotation, about the margin, the leverage, opening an account, that's not really a big issue once you have a profitable trend that you can predict. Very quickly, let's go and watch our rules to understand how does an uptrend look and how does a downtrend look. Basically, the very simple rule, that's I wouldn't call this a secret. Many people call it a secret. It is not actually. It's a very classical way of understanding an uptrend and downtrend, and then when that ends and when that starts. What we see here, that drawing in front of me, the thing that I'm drawing now, it's very simple. These are a group of waves that are creating peaks and valleys, or tops and highs and lows. The high here is the start, the low here is the start, and then that high certainly is following the previous one, is called a higher high because it's higher than the previous, and this one is called a lower a higher low. Higher high, higher low, higher low, that's a trend. Once you will be able to break out of a previous higher high, that's now an uptrend. An uptrend technically is a series of higher highs and higher lows. A downtrend is the opposite. Okay, and what we need really to escape from is this. That's what we need to escape from. This is called a sideways. And believe me, people, when they see it on the chart, after the fact that they feel, oh, that's easy to recognize, but it is the worst nightmare because it's very hard to recognize. You cannot really predict when it happens. You need to have really like two-thirds to see two-thirds of this market just forming to understand that the coming might be a continuation for that sideways movement. And if that happens, unfortunately, you are not certain that the coming is going to be sideways. Even if you will be certain, you will be actually making from 20 to 40 pips. So you will enter the market with a risk to make very, very little return. But the difference with the trending markets here, that yes, you could actually as well pass 20%, 50 to 60% of the trend to really get a confirmation that that is a trend. So our trading is going to be in this area. But the thing here, if you will make 2 successful trades, your targets are going to be 200, 150, sometimes 300 plus pips. And if you catch really an impulsive wave at the end of the trend, usually like the elite wavers call this wave 5, sometimes this could yield 400 pips or more. So the risk reward ratio is very, very favorable. If you want to know more how to trade about how to trade on the trend, if you want to understand further how can you get into these markets, how to understand this analogy, we actually put a little course. You can find the link in the description. It's very simple, and we try to explain it in an easy way, because we don't believe that complex strategies are the right way to approach the market. We believe that simple is better because you can repeat it in an easy way. The course is free. Just click on the link in the description. It may appear on the screen now to get hooked with this course. Now let's go to the calendar and view today's calendar and what we have. Looking at the calendar today, yesterday we had the PPI number and it was positive. We may actually think that that contributed for the rally that happened yesterday on the dollar index. Today is a very packed day. I would be very careful today with the market. Wednesday, February 15th, I would be very careful actually with the market. We have CPI, change in price of goods and services purchased by consumers, and then we have core CPI, core retail sales, Yellen testifies. That's gonna be something that maybe will do something in the market, because usually she moves the market very well, and then not in a direction. Usually it's in sideways. Crude oil, because everybody sorry for coming back to this point, so everybody interpret what she says in a different way. Crude oil inventory, this is a news as well at 3:30. Usually that doesn't really, it's very hard to predict the outcome of that. However, it does affect the market in a certain way. So by looking at that, we have 1, 2, 3, 4, 5, 6, 5 numbers and testimony. So today is a very back day. I would really be very careful on my stop losses, and I will certainly try to be careful on the positions. If we will move to the chart, let's have a look. Now we will start to talk about the concept that we will start to carry on implementing the concept that we were talking about in the introduction. This is the US dollar index. The US dollar index is a very key indicator to understand the behavior of the dollar, key support levels and key resistance level and structure. If you look at that, the US dollar for a very good period have been trending down in a downtrend, which had a corrective structure. Certainly once we created a low, higher high, lower low, lower high, once we broke the market here, just clean the drawing, once we broke the market here, we have been certain that this market is in a downtrend, so that rally had to be sold. Okay, market just went down and created a low, so whatever resistance that we will reach has to be sold. That had to be sold. Okay, market went down again, made a lower low and never breached the previous high, so anything comes after that had to be sold. Okay, the market just went down again and rallied, so whatever happened here had to be sold. Okay, and usually the stop loss is beyond the previous high. So for the first time we had a break for our stop loss. Okay, and we spoke about this the last week, and we actually published that trade. We broke that previous high. Once this happened, we started to say, listen, the dollar index might have a reversal point. We cannot say we confirm that it has a reversal point. We say we might have. Might have, it means first we will cease shorting that market. Second, if we had any stops, these stops should be triggered all right. So it is not an invitation to get into this market long or short. It's an invitation just to cease trading on this market. We need to be so just to be clear, to long this market. Okay, yes, now it's moving higher and it's brilliant. No problem, but I cannot guarantee that this is going to continue for a while. And if it continues for a while, okay, it may reach actually the 101.5. It may reach it, but the reversal, I cannot understand the magnitude of that reversal. It could be really very sharp, and then I will have this chainsaw effect, just entering into the market and then getting out of the market very quickly with loss. So to be sure about that market, I need to see this. I need to see a low forming, a low from the magnitude, from the same magnitude of the previous waves. Like I wouldn't accept a low like this. I wouldn't. This is not going to be a low and then a high. No, I need to have a bigger low from the same magnitude of that previous wave size. Okay, so basically I need to have a low like this and then a break. Okay, that will confirm me. Then I need actually to break this high again. So I need to have something like this and a break up here. This is gonna make me certain that this market is an uptrend, and then I will start to join this market. So as you see here, we started to join this market in the lower third, but that is a higher probability. We had 3 successful trades and 1 loss at the end. So this is the type of thing that we need really to understand about trading. It's not only about getting into the market. No, we need to get into higher probability markets so we can really have higher probability outcome. So as you see, I'm not very willing to trade the US index and all its accessories like currencies in general. But if we will move to a very nice thing, which is the SP500, now we are talking trading, we are talking predictability. Okay, look at that market. Currencies, my opinion, bad. Now, really bad, because usually the dollar index is the key element in all currencies. Is the most powerful currency. It's the common denominator on many currencies. So currencies are bad because I'm not certain about the dollar currency, the dollar index. But look at this. This is the SP500 that says I am in an uptrend. It's very powerful. No previous low have been breached. Recently, as you see, the market found a support and then it's rallying. No problem at all. If you look at the Dow, Asia as well is doing the same. We have a hiccup here up on the top, but doesn't matter. What we need to do is just to long whatever correction happens in that market. Okay, if you carry on that and dig a little bit deeper, and I have 2 examples here that I like very much to talk about, which are Apple. As you see, the market is rallying. It doesn't care about anything. A small hiccup here in the middle on the 4-hour, on the 30 minutes. On the 30 minutes, the market just is creating flags and it rallies. Yeah, this is the type of market that you really need to be in. Certainly it's gonna reverse some time. I don't know when is that gonna happen, but look at these gains. Look at these gains. Look at these gains, flags, and it's maybe some flags is forming today. So This is something I really wanted to bring your attention to. That's for example Apple. This is Tesla, same story. That's on the daily chart. Market is really very powerful. Yes, there is a reversal sign or whatever hammer. No, I don't care about this. All what I care about is that I need to really buy in this market. People who really try to predict the top of markets of trends are making themselves a huge disfavor, because imagine that there is a train. The train is traveling between two destinations. The train have just left the first destination and charging. That train have like 10 cards and is really moving forward. If for a second that train driver on a speed, let's say 250 miles per hour, if he will decide to stop that train now, two things will happen. Okay, if the train stop now, certainly that train is gonna fly in the air for at least 500 meters, 250 meters. There's a huge energy that this train contains, and needs to continue happening. If that train will slow down by correct methods, it needs a couple of miles, at least 4 or 5 miles to stop. Okay, imagine that you are the person, which is not a mechanism in the train, that want to stop that train, and you will stand against that train, putting your finger, putting your hand, or putting your car. It's going to be a huge disaster, for you. So it's very important to understand that really stopping a trend is like stopping a train. Even if we had that nice reversal candlestick on the top of a trend like this, all what you need to, when you look at this, you need to anticipate a correction coming, and then you have to be patient. Don't short it, because 95% of traders are shorting Tesla now and shorting Apple now, and certainly they are bearish on the dollar index because things like that. But what we need to understand is this what it might have to happen, a correction, and then we long it. If you will sell now, you will be so anxious waiting for a drop, but that drop might never happen. If you will think that you will take maybe $10 in Tesla or $5 in Tesla, you will wait for a long time, 3-4 days. But then when it just reaches the support, you are focused on the long, so you will never, and you will not see the evidence of the support. Market is gonna rally and it's gonna break your stop, and you will win nothing. You will feel like you lost. So it's not really a good idea to short charging trend like this. The best thing, as I said, to, if I can, yes, the best thing is to long it. Tesla is a very good example, and Apple on the SP500 stocks that are very, very good to trade. If we move to gold, that's a commodity now. Gold is in a sweet spot, to be honest. Usually there is a negative correlation between the SP500, the dollar and the gold. So dollar is moving up. That's why, if you notice, there is a correction happening in gold recently. If we very quickly go to the the dollar index, you see that charge up here. That rally is met by that correction. what we expect looking at this structure, if you look closely, you have high, correction, high low, higher high, and this structure is a corrective structure. I will put this chart on the daily. For hours. Look at this. Very, very, very classical understanding of a trending market. That's uptrend, and this a nice correction. Okay, what we need to see, as you see that line here, the 1220 is a potential support for that market. So we need to see an evidence here, maybe a break of a small an evidence here. Okay, so we can continue rallying up to like, just reduce that. I think we can continue a rally from somewhere over here. Maybe we have a nice dip here, and then 113.00. This is what we could expect actually for the gold, because it's really in a very nice sweet spot. There's no previous lows have been broken, and you see this beauty here. The market is actually hovering around that 1220. It's very, very nice. So that's gold. These are commodities. If we move toward the euro dollar, as you see, euro dollar is in a shorter term downtrend, but as we said, if you look at this, the certainty of this market is not really huge. That was a correction. The market is rallying down. All what I need to see is a lower low and a lower high. On that magnitude, there is nothing. However, on the 4 hour, there is a downtrend that might actually benefit you if you want to trade that market. If I want to get into the market, I need to look at stocks. Really, these are very strong trending markets on long, short, mid, long, mid, and short time frames. They are really confirming each other's. The SP 500, the Dow, the Asian Dow, all are confirming really strength. So this is really what you need to trade. If you want a nimble and you're interested in being in the currencies arena, you could look at something like that. That's a short actually. The US dollar, Euro US dollar is in a short. So today the high is a short opportunity. If the market is gonna make a lower low and go up higher a little bit, it's another short, and that's the scenario in relation to the Euro USD. If we will move forward and have a look at the USDN, USDN started a rally. If you have been shorting that market, now it's the time really to exit. You don't need to short this market again. If you are long on that market, I think it's right. You can be long this market. Yesterday we said we had not yesterday, actually on Friday, we said that by having this structure to consequent, that was actually a shooting star in that time on that, I think it was Thursday. That second shooting star, actually we thought that this market should go down. looking and considering the previous downtrend, that was a very fine downtrend and it was really nice. We started to be in this market after that confirmation. Low, high, lower high, lower low, and lower high. So basically what you needed to do is just sell that market, and it was really very successful. However, now we broke that structure. Yes, we are on 32.8 support, but doesn't really mean anything. I don't like really to get into markets just using Fibonacci or support resistance level. I need to have a trend, classical definition, correction, and then an evidence, which is going to be a candlestick. Certainly like a group, I need to see like at least 2 or even 3 evidence. I need to see resistance, support, resistance level. I need to see a candlestick, and I need to see a Fibonacci. Okay, sometimes it's better as well to get into the lower time frame and to have a good confirmation with stochastics or even trend reversal for the lower time frame. So again, in relation to the US dollar, I think people who want to long it, I think it's fine. I'm not very keen again, because as I said, I'm not really very keen recently on currencies. I'm very pro with stocks. GBPUSD, again, look at that. That's rubbish. This is exactly the example that we were talking about recently. That's a sideways movement in a bigger sideways movement. Okay, it's very short-lived. It's very short-lived. Like, I really cannot say, oh yeah, it reached that top and now it's going to the bottom. Okay, or maybe it needs to continue to reach that top. It's very hard to say. Maybe from price action point of view, you could say, oh yeah, that's a flag, and then we need to go up higher. Blah. That's blah. That's blah. Certainly I will be right and everybody else will be right. Everybody's gonna be right. The market is gonna say what he wants to say. What we need to see is a previous confirmation. We need to see a confirmation, a higher time frame confirmation. Okay, which is the trend. We need to see something like this. What do you think? What is that? That's like, where's this going? My grandmother will actually easily say that this is going north. Okay, how you want to trade this? Where? Certainly everybody's gonna short that, but you know, hey, what's going on here? So then if we move to British pound, I'm really sorry this video is taking a little bit longer than expected. I'm trying hard to make these videos shorter, but you need to tell the story sometimes, because I don't want to give you a support resistance. That's it. Like, I want to tell really why is this happening. So this is a US dollar, basically US dollar CHF, Swiss US dollar, Swiss franc. The same story as the dollar. Okay, we reached support level. Market is rallying over that support, so certainly there is a potential for longs. But you know what? I don't care about this now. I want to see a trend forming. Yeah, I want to see something like this and then rally. You know, here, higher high, higher low, and you know, yes, there is a high, low, a higher high. Yeah, that magnitude is alright because it's almost the same as the previous, but I need to see, okay, another higher low. I need to see a higher high and a break of a higher high. This is what I want to see. However, this market is actually tempting because the structure is very interesting. But as you see, changing my mind. I'm changing my mind. Oh yeah, it's nice. It's not nice. This is really what we need to avoid. Once I overanalyze the market, once I look at the market, you know, George Soros says, or George Soros' son says, that I know that my father is in a bad position when I see him sitting in front of the computer. When I see him in front of the charts, I know that he is in a bad position. And he said about himself, usually I have bad positions when I have a backache. You know what does it mean? It means like, you know, backache, sitting in front of the desk, watching the chart, analyzing, you know. So we don't want to have bad positions. Okay, we don't want to speculate in the market. US Canadian, that's a clear example of a horrible market. USD Norwegian krona, simply, it's a good market. That's a short, you know. Yeah, certainly there's a support in a couple of levels, but that market, I should really remove it for now, because we were actually trading that market for a very long time, and actually I think we could continue trading that market as well. You see, sometimes you hesitate when the low, the high takes a little bit of time to form, as you see here. But anyway, you need to really be persistent. If this is a downtrend, you need to keep selling that market. Actually, with that traders, we come to the end of our episode. It's as in front of me, as I can see, it's 36 minutes now. I apologize for that. I hope that the episode is entertaining somehow. I'm trying to make it informative. I want to bring you at the back end of my mind, how do I think about trades? How do I want really to join the market? How do I view it? I don't want to really give you a support and resistance. Market's up and market's down, and it's done like that. I want to give you the depth of my experience in trading, because sometimes it's all in the basics. Like, for example, telling you guys about that really over-analyzing the market is a wrong thing. Trying to tell you why the rush, why we have to get into the market, because it's there. And trying to be picky. That's actually the secret of success in markets trading. I don't want to call it forex trading. Okay, it's markets trading. This is the real message that I want to carry through. Markets trading. We should never trade one market, market group. We have to be always looking, because if sometimes when the stocks are bad, currencies are beautiful. Currencies sometimes are bad. Commodities are beautiful and clear. We need to be always on predictable, clear markets. If you liked that episode, please subscribe in the channel if you haven't done this before. If you like the episode, give us thumbs up. That's really significant for us. And leave a comment if there's anything you need to know more, if there's anything more you need to know about markets, or you think we need to include in these episodes. If you feel that you want more information about the course, it's free. The link is down in the description, and wish you a pleasant trading day.